Gold prices have come under pressure lately, declining by almost 4.5% since the peak in September. This after the precious metal staged an impressive rally over the summer, gaining more than a fifth of its value. The commodity has been suffering amid improving risk sentiment as trade war and Brexit concerns have started to subside. Joining me to discuss the technicals is Serge Berger from thesteadytrader.com. Serge, good to see you as always. So we've got a few charts to get through today. Let's start with gold then. I mean, we have been seeing this slight decline over the last month. Where do you expect us to go next?
Hey, Victoria. Yeah, so I think, the bigger picture, I actually think gold has entered a new, I'm going to call it a secular bull market if we use equity terms. And I think the recent move has largely been just one of consolidation as opposed to a technical topping move. And a simple way to look at that, and you can't see it in this chart, but I'll just say it to you, is that if you look at gold in different currencies, gold is basically up in pretty much every major currency terms this year. In addition to that, gold is up alongside with the dollar, which is kind of a rare, actually not kind of, is definitely a rare occurrence. So to me, that speaks to a lot of actual real buying, not just on the part of investors, but also as evidenced by central banks. So to me, it's a consolidation phase, and I think 1600 in GLD or 160 in GLD, 1600 in gold is probably a story over the next, I don't know, I'm going to call it 4 to 6 months, something like that. It's very difficult to time it in the immediate term.
All right, now the other chart we wanted to take a look at is Apple, because that's really had an impressive rally this year and indeed over the last few years. I think the stock's rallied by around 75% year to date alone. I mean, that's a serious return. What are you expecting next? I mean, if we were to extrapolate that out for the rest of the year, that would be some crazy returns, around 100%. So is that what you're expecting, or do you think we could see some kind of a pullback into year end?
I think you have to be careful with Apple just looking at the fundamentals, or even quite frankly just looking at the charts, although they're giving us good perspective, but understanding that Apple is kind of one of those stocks that have to be chased if broader U.S. equities get pushed higher, particularly the S&P 500. So there's kind of a double-edged sword. But just kind of focusing on the charts for a minute, you're right, the stock is up sharply. I think it's somewhere between 55% or so year to date. Just pulled back a little bit the other day, but it's up 10% alone over the past I want to say past a few weeks or so, I think about 3 weeks or so alone. And what it's done technically, and this is really the point, it's reached the very upper end of its longer term trading range. You can see it here in this chart. We've essentially reached the upper end. We reached it last time we reached it was September 2018, and I'm not saying we're going to have the same reaction in the stock, but just for perspective, the stock then actually ended up dropping, call it almost 40%. From a momentum perspective, the stock is very overbought. That's a simple MACD analysis at the bottom of the chart. Last time we were here, you saw the reaction in the stock. Again, I'm not calling for a dramatic crash in the stock. I just think at this point people have to think about, is it really worth buying the stock up here when there's no historical precedence that the stock could really accelerate higher meaningfully out of the upper end of its range. Going into earnings, and the stock, the company's about to report earnings after the close, it's probably best to just wait until earnings to clear, see if we get a mean reversion move into the middle end of the range or something like this. I think to the downside, anything around 220 to 230 is very reasonable to expect for the stock through the lens of the next few weeks, and then maybe you get another buying opportunity. So I'd just kind of wait out the earnings play. And by the way, if we shoot to the upside after earnings, that'll be an even better call to maybe actually short the stock. But again, we have to see what the reaction is in earnings. The expected move in the options market is about 11 points in either direction after earnings. So we'll see how that plays out.
Now, finally, let's take a look at the DAX, because European stocks have hit 22-month highs this week, the DAX hitting 4-month highs. But since then, we have seen a little bit of a retreat over the past couple of sessions. We know that this has been buoyed by the ECB and its shift towards more dovish monetary policy. Tell us, what's your outlook for the DAX? What are the key technicals to look at? Because I know that it's coming closer to that key support level.
Yeah, indeed. I mean, the central banks, once again, have been the culprit to not only push European equities higher, or at least, kind of keep them from going lower. It's the same story in the U.S. markets. But if you look at the DAX, let's take two things. Let's have a look at just the charts for a minute, because there's a lot of people that are just chart gazing. that are saying this is very bullish, and indeed it actually is if you just look at the charts. So you look at the charts, you look at the DAX, you can see, you can call this 1,000 different things. Everyone can draw a simple line and call it an inverse head and shoulders pattern, whatever you want to call it. It does look like we're breaking out, and indeed we actually have broken out. If you take a bit of a look closer though, and I'm going to make this now a daily chart, what you can see is that the measured move that we've had basically in the month of October, or at least the second half of October, essentially has matched the move from the lows in August to the highs in September. I literally just copied this distance and added it to here. So to me, from a technical perspective, the DAX here is probably at risk of some sort of a mean reversion move, and I would expect this, very similar to Apple, to be something that you want to be very careful of on the upside. Into year end, possibly we can buy this again, but right now, and I'm just going to see if I can draw a simple arrow here, I would expect something like this to happen first before we ultimately could go higher again. So again, wouldn't chase it here. I think easily, down into the 12,500, 12,600 area. That really shouldn't be a very difficult accomplishment for the DAX to mean revert. And just so you guys know, in percentage terms, we're talking about a 2 to 3, 4% move. Really not a big deal in terms of a mean reversion to the downside before maybe a better buying opportunity.
All right, Serge, thanks so much for your time as always.
Thank you.
That was Serge Berger from thesteadytrader.com talking us through the charts of gold, Apple and the DAX. I'm Victoria Scholar and thanks for watching IGTV.